Hi guys, I'm just going to give you a quick update on gold and silver, but before I do that, let's have a quick look at the gold-silver ratio. This is the weekly chart suggesting that the price of silver is outperforming gold, and so with gold already breaking out, I think that attention should be turning to silver now because of the fact the gold-silver ratio is falling. This is the daily chart, by the way, showing lower lows and lower highs, and we've broken below this trend line here, suggesting further weakness is likely, possibly down to this level here, where we also have the 200-day moving average converging. Okay, so let's start with gold. Just a quick reminder to those of you who haven't followed me closely. I have been bullish on gold for a very long time. I turned bullish on gold actually when price broke out of the 6-year consolidation on the monthly time frame back in the middle of 2019. Then I was at Forex.com and City Index, and I mentioned in several of my reports that I expected gold to head towards $2,000 because of concerns over equity markets and the fact that central banks are going to keep interest rates low for a very long time. And if I should be somewhere here, if you write my name and write gold 2000, don't know if you click on one of these links, maybe this one, you will see my comments on gold. So if I write my name here, you'll see my comments, and I think I mentioned that the technical breakout from a 6-year-old consolidation, that was a technical reason, but also fundamentally I mentioned something. Oh yeah, there you go. If US stocks were to correct themselves in 2020, we've already seen the correction due to the pandemic. Obviously I hadn't expected that at the end of 2019, and I said this surely would lead to elevated levels of haven demand for gold. And if the equity market bubble bursts and safe haven demand rises for gold, then it may nudge it past 2011 peak of 1920 before tagging the 2000 level. But also, more to the point, it was that the fact that I expected real yields to remain low because of the actions of central banks. In fact, more central banks have turned significantly dovish since 2019 because of the pandemic. So I still think we will get to the $2,000 level at some point down the line. I don't know if this will happen in the coming weeks, months, or even years, but I think it's more likely than before that we will get to that 2,000 psychological handle at some point. But going back to the chart, this was a 6-year-old consolidation from which gold broke out from. And when gold spends that much time in consolidation and then it breaks in one or the other direction, usually you will see a significant move in the direction of the breakout. So that's why every time gold pulled back, if you look at the weekly, you'll see it. For example, here during the height of the pandemic, I maintain my long-term fundamental view that gold will head higher, and also my long-term technical view as well because of the breakout from the 6-year-old consolidation. So that hasn't changed. I still think that gold is going to go to 2000. I obviously don't know when that will happen, but the way gold is going on, the way gold is rallying at the moment, could happen at some point this year. Who knows? But let's see if it gets there. I mean, it doesn't have to get there as long as it rises. That's what matters, right? If you're bullish, and that's how the technical outlook continues to look at the moment for gold. The all-time high that was hit back in 2011. This is that level here. We have this triple top here. Or we had this triple top here. It's an important level, 1800, because it's a psychologically round number, so we may see some profit taking around this level now that we are testing it. Yes, we are above it today. We are $5 above it. It's possible we could, go a little bit more, but I'm expecting some profit taking because of the way gold has rallied over the last few days, and so don't be surprised if things turn around from here. But ultimately, the trend is clearly bullish. So let's go back to the daily now. So yeah, we've got those two levels from the weekly time frame, big levels to keep an eye on as we look at price action more closely. So the first thing I'm going to draw is the trend line connecting the previous highs like this. Okay, so we've broken above it. The reason why it is still relevant, or should be still on the chart, is because say we go back below it, then that would indicate a false breakout scenario, in which case it would be bearish. In the event that gold does reverse, I would still require a break below the most recent low, and the most recent low is this one here, which is at 1757-ish. Okay, so if we go below that level, then that would be the end of the short-term bullish bias, in which case we may see a deeper correction, possibly to levels such as this, which was a former resistance level, or even further lower to levels like this. For example, this level was a breakout level, which was never retested after the breakout on the daily time frame, at least. So that level remains exposed for a potential retest at some point down the line. Obviously, we are miles away from that level, but I'll just leave it there in case in the future we get to that level after a correction. So the focus is obviously to the upside right now, and so the path of least resistance is to the upside. And let's draw some Fibonacci extension levels where price may be heading to next. So the first Fibonacci extension set I've got on here is derived from the most recent downswing. We've already crossed the 127.2. The 161.8 comes in at 1808, and then the 261.8 comes in at 1840. So around those levels, expect to see profit taking, especially the 161, because it is close to the 1800 level, which is obviously a big level. You could also draw your fibs connecting this high with this one, just to see if we get any convergence with any other Fibonacci's. Look how price struggled around the 127.2 before breaking through it. So from this downswing, we've got a Fibonacci extension coming in at 1823. So those are the key Fibonacci-based extension levels that I would be watching, not very closely, but watching to see if we'll get some profit taking around. Because when gold or any market breaks out like this, usually people use Fibonacci extensions as their objective targets. So we may see some profit taking around those levels. But as I said, the path of least resistance is clearly to the upside, and even if we do see some profit taking around those levels, I would expect the dips to be supported and resistances to break down, as we have seen. Let's go to, I want to spend more time on the silver chart rather than gold, because we've already talked about gold extensively in the previous videos. But with silver, we've had it's been a struggle, I'm not gonna lie. It looked every time we broke out of a range in recent times, for example from here, it looked like price was going to get to the $19 level. It got close to it, but then went back down, back in the range. Then we had another breakout, and then that again is stalled. But this time, price came back to the top of the breakout area before pushing higher. So this low here that was created a few days ago on 2nd of July, this is the key level for me now. For as long as we remain above that, the path of least resistance is going to be to the upside, because that was the last low that is created prior to the latest move up. Okay, so we want silver to hold above that level if you're bullish. Key support is 1836, the high of this doji candle that was created the day before. I'm going to draw an additional level onto this, which is right here at 1838. So this area here is key in terms of providing support. Okay, this shaded region here. So if you're looking to enter long, maybe a potential tradable opportunity would be to wait for price to go down, or if it does go down, before pushing higher again. The ultimate objective in the short term would be that area of liquidity above the prior highs, and the high above this candle is 1895. Okay, so both of these highs are below the psychologically important $19 level. I think 19 is there for the target because of the fact that these highs come in just ahead of that level. So 19 is my main objective, but then once we get to there, to $19, if we get there, I say if because you never know what's going to happen next, right? You know, it looks really bullish at the moment, but things could turn around really quickly. If we get to $19, then the key question is, do we hold the breakout or do we go back below? Okay, so if it gets above, then and stays above, say for a couple of days or something, then I would be inclined to buy any rounded retest of this level for a continuation higher to levels such as $20 maybe, or even higher over time. However, if we get a false breakout, something like this, right? So imagine price goes above the two old highs and then creates a inverted hammer candle like this, for example. If we get something like that, that would indicate to me that price will have formed a failure there. In which case, actually, I wouldn't be too bearish because of two reasons. First, because this level has already been tested 2 times, so we may get another failure to, you know, trap more sellers before ripping higher. Secondly, because of this price structure right here, which is important because when price consolidates like this ahead of a key level of resistance, usually, but not always, usually price breaks through and then any retracements that you will see in the short term will get supported. In this consolidation, it's likely that a lot of people will have accumulated long positions. So the pressure is building, therefore, for silver to break higher. So if we see an inverted hammer candle or something like, or another bearish looking candle there, I would expect price to pull back to the point of origin of the breakout, which at the moment is around 1840-ish, as we highlighted previously. I would expect price to pull back to this region, maybe spend some time consolidating there before breaking higher again. So in both cases, I would still be bullish on silver. But if these two scenarios don't play out and silver goes deeper in the prior consolidation area, then at that point I may have to drop my bullish view. In any case, if silver were to go below a prior low, so at the moment the most recent low is at 1776, as I mentioned, and the whole point is really if we go back below that most recent higher low and stay below it, then at that point I would have to drop my bullish view on the market until price creates another bullish price candle at some lower levels. Okay, so that would be the bearish scenario. But as I mentioned, it's looking quite bullish, silver. And given the breakdown in the gold silver ratio, as we saw earlier, silver is the one to watch out for now for a potential rally. Well, it has been rallying, but a potential acceleration in the rally. Okay, that's all for now. I will provide another update either by video or via a written article if things change materially in the coming days. Take care. Bye bye.